Good morning, everyone. My name is Sriram from the Commodity Research Desk at Reliance Securities. Welcome to the weekly commodity outlook. So starting with the bullion side of things, international and domestic gold prices remain subdued this week, with the international prices falling below the 2000 level per $2,000 per mark for the first time since the second week of April. Prices were down, tracking the strength of the US dollar and the US benchmark bond yields. Additionally, continued hawkish Fed speak over the past 2 weeks have also weighed on sentiments, even though the recent Fed Powell comments were deemed not overtly dovish but not definitely hawkish too as well. So prices have struggled despite that. And we see that markets have been also factoring in a chance or a 71% chance that the Fed could maintain status quo in the upcoming June meeting. And so I think overall markets continue to struggle, and but a big fall in prices was lacking in gold. Of course, silver struggled, prices fell significantly, but a big fall in gold prices was lacking this week. Prices did find some support on the back of fears that the negotiation of the US debts ceiling has yielded no result, in fact, yet, and the negotiations, of course, continue. But lack of any big progress there continues to lend some support to the bullion prices amid due to the safe haven appeal of the bullion market. So I think overall we see that bullion prices will continue to struggle going forward. We see that the key trigger in the upcoming days will be the FOMC meeting minutes. Of course, that is actually scheduled for tonight. But apart from that, we also have key numbers from the US GDP, along with the Fed favored PC price index, which is the inflation gauge which the Fed keenly tracks, and core durable goods orders will be the key triggers for the bullion markets this week. So we see on the charts, because of that, markets can remain range bound technically. For MCX gold August contract, we see the markets remaining within a broad trading band of 60,000 to 61,000 ahead of numbers and FOMC meeting minutes. And on the international side, we see 1950 to 2020 remaining the key range for the international futures, but these ranges will change after the release of key numbers and the FOMC minutes. So I think all eyes will be on that. Until that time, markets will remain extremely range bound. On the crude side of things, prices rebounded. Both international and domestic prices rebounded significantly, supported by a supply shortage and hopes of demand recovery. More importantly, I think the gasoline futures rallied almost 13% from the lows of last week, and on hopes that the demand will recover going forward ahead of that US summer season. In fact, the US Memorial Day holiday, which is upcoming on the coming Monday, kickstarts the summer driving season in the US, and the bulls of the market hope that demand for gasoline will spur demand for crude as well, and that's why markets have been factoring a recovery of demand and push the prices higher. Additionally, there is also speculation in the market that OPEC and its allies can cut output further. In fact, yesterday, Refinitiv News reported that Saudi Arabia's Prince Abdulaziz bin Salman told speculators to watch out in what the market is taking that statement or signal that OPEC could cut further going forward in their June 4th meeting. So markets have been also gathering support on the back of that. So we could see some more upside in crude prices at least in the short term basis. But like the bullion markets, the key triggers will be that FOMC minutes and of course the US GDP numbers. But on the charts, we see that for NYMEX, we see $74 remaining the key hurdle, and a break above and a sustained trade above will push the prices higher. Otherwise, markets could struggle and move back to that $68. But only a significant break below that $68 will pull prices or can be a negative sentiment for the markets. On the domestic side, we see a broad trading band of 6200, 6300 on the upside to 5900 on the downside of things. Finally, on the base metals, most of the base metals were weaker this week. In fact, zinc has been struggling significantly over the past few weeks, and it continued to struggle this week as well. Copper and aluminum also struggled this week. Of course, speculators have been boosting bearish positions in copper on worries of a possible US recession and weak demand in the top metal consumer China. I mean, the discount of the LME cash copper to the 3-month contract has soared high to almost $70 per ton, the most highest in almost 30 years, indicating extremely strong supplies for the market, and that also has limited the upside for copper prices. In fact, the $70 compares to a premium of $7 in the month of April, so this premium has significantly shot up significantly, and we see more correction for base metals going forward, especially copper. We see more weakness. Of course, as I mentioned, zinc has also been struggling. Rise in output in China and rising supply globally has also kept the zinc prices under pressure this week, and we expect the markets will continue its weakness in the coming week, and most of the base metals will struggle in the coming week. But like the precious metals, base metal traders will be awaiting the FOMC meeting minutes. Of course, a hawkish view will continue to weigh on sentiments, will push the dollar higher, and will keep the upside limited. But a slightly dovish FOMC minutes can lend some support. Of course, we have the US GDP number, and on an upbeat number can lend some support to the base metal sector as well. So overall, pretty busy calendar, few sessions for the markets, and we see markets remaining slightly negative going forward ahead of that. On the charts, we feel for zinc, copper, and aluminum, supports are at 200, 700, and 205 levels. And on the upside for zinc, copper, and aluminum, we see resistances at 220, 740, and 225 respectively. And markets can remain within this support and resistances till the data comes out. So that's it from our side. Thank you very much for listening. Have a pleasant day and a week ahead. Thank you.